All righty, good morning, everyone, for the Hurley Investments Trade Findings and Adjustments for Thursday morning, the 30th of May. We are in a rather unusual market, and if I go ahead and I want to just pull up a couple charts just to take a look at the market. In fact, you know what? I might do this through FinViz. Let's see if I can do it this way. I like their charts. I like the way that they show a little bit. If we look at the Dow Jones Industrial Average, I think is what they're going to look at. There's the Dow. Kind of a ridiculous looking chart. Kind of looks pretty ugly over a year, right? In fact, what chart pattern looks like we're fulfilling here looking at the Dow? If I could ask you guys, just looking at the Dow, what chart pattern does it look like we are completing here on the Dow? What do you think? What chart pattern? There we go. It kind of looks like a double top, right? If you were to take a peek at this chart pattern, there we go. There we go. In fact, you could even say we have a head and shoulders forming this year. This year, you could definitely say, hey, you've got a head and shoulders forming, which typically would mean we're going to go back down and test some of those lows. Interesting. I hadn't seen that earlier, but I would definitely agree with that. If we were to take a peek at the S&P 500, again, I would go a double top here, but looking more short term, I see it much more. Sorry, guys. I see a much more pronounced head and shoulders. Yes, no, maybe so. It'd be interesting if we saw the NASDAQ. Not so pronounced, but at least a double top, at least a head and shoulders. I'm thinking, well, let me ask the group. Which way is our market going to go when you see a head and shoulders pattern like that? What is the expectation for the market? Obviously, bearish. There you go. It's bearish. We're looking at some kind of bearish setup for our market. So, first question that someone's going to probably ask me, did I place any of the trades that we talked about last Tuesday evening? And it's, if you remember, I said you got to use a bit of common sense, right? In all honesty, we have a head and shoulders that look to be in most of our accounts. So I'm looking at more protection. I'm looking at more protection. With that said, I have not bought more time with my Boeing trade. So as I was looking at the trades, and let's see what we have. And orders. I would feel very comfortable Why is this not probably because the view has to be shrunk down to 100%. Maybe because it has to be just a little bit less than that. Let me go to 75 really quickly. I'm going to shrink it down just a little bit. So I have all of these here. Come on. Let's take a quick set. Huh. Always when I can't find the way I want it. All right, well, if I was going to do any trades, it would be moving out my Bank of America, moving out my Boeing, where literally I'm going to adjust it and I'm going to do nothing more than give it a little more time. And the more time that I want would be out to November. I'm going to move it out to November. I think they're going to move pretty quickly here. I just don't trust waiting to 390 again this far out in time. 3333, gonna sell that one. I obviously want it to be as cheap as possible for me. Preview, send. And off, I'm gonna sit and wait for Bank of America to be rolled out in time. Interesting, if we take a look at FCX, we're trying for a 62-cent limit. FCX is trading 16 cents lower. Again, looking at a chart on FCX, it's got to bounce somewhat soon. But can someone explain to me how right now it's trading 107, it's trading 18 cents lower than Tuesday. Yet here we are where we can't get our 62 cents filled. So will someone please explain to me how we're not getting our 62 cents filled on Freeport-McMoRan when it's trading a whopping 18 cents lower, from 107 down to 989. How is that possible? What are your comments there? So it's interesting. You just said, Tom, an increase in volatility. So I want you to think about that really quickly. If you have an increase in volatility, wouldn't that credit go higher? If I had an increase in volatility, shouldn't I be filled or have gotten filled at 62 cents versus the market only taking 61 cents right now? Kind of doesn't make sense, right? Why is that possible? How is that possible? Increased volatility gives you a bigger credit, right? So we should be filled. Item, market makers. Markets are rigged. I like where her head's at. Market makers are going, that's too good of a trade for 62 cents. So here's the question. I like the way that you said that. So here's the question. Is it worth giving up a penny? Am I going to lose out on 61 cents over 1 penny? In fact, let's just do some simple math here. Simple math, simple math. 1 divided by 62. I'm giving up 1.61% of my potential profit to not get filled on FCX, on a stock that's clearly oversold, right? Am I going to worry about 1.61% and not worry about the other 98.39%? Shouldn't I be okay making 98.39% of my total potential profit, or even half of that? Why am I hung up on 1 penny? Why am I hung up on 1 penny of this potential trade that I'm not willing to put it in there? Yes, I felt more comfortable when it was holding $10. I will agree. But because I wasn't filled at 62 cents, I got held up on 1 penny. And I'm going to use this as a pro and con discussion today. Sometimes we set a limit order trying to scalp that extra nickel, right? Has anyone done that? Has anyone tried to scalp a nickel? Come on. I can't be the only one. Has anyone tried to scalp a nickel? There we go. All right, I had a couple yeses. I think I was trying to scalp 2 pennies. And 2 pennies on 8 contracts was like 16 bucks. I was trying to scalp 16 bucks. And I missed out on I'm pretty sure it was an $8,300 profit. For $16, setting a limit order to scalp like 2 pennies better, 16 freaking dollars. I missed out on $8,300 of profit. So 8,300 divided by 16. I need 518.75 profitable trades that I can scalp $16 to make up for that mistake. One more time. I need 518.75, so I need 519 profitable trades where I can scalp $16 to make up for that one trade I missed because I set a limit order so I could get filled $16 cheaper. Now, yes, this was way back in 2008. Pretty sure it was on Apple. Oh, what a mistake. But I think it takes a perspective to make sure this is a smart idea. So out of curiosity, FCX, it's due for a bounce. If you go through last Tuesdays, bounce should be as high as 1330. That's just taking its forward projected earnings per share by its PE. 1330 is where FCX should be trading. A move with China, it pops up. So here's the question. Between now and July expiration, tell me, how many of you would get into FCX right now for 61 cents? Why am I not seeing a bunch of no's or yeses? Well, okay, there came our first yes. And knowing this guy, if there was someone that could put me underneath the bus, this is the guy. The guy that just said yes. I'm going to tell you a little bit about him. Understands verbal cues and body language. Has tested me for at least the last 10 years to make sure I was telling the truth on everything I was saying. Former law enforcement, former insurance auditor, I don't know what he would call himself, but validate insurance claims and so forth. This guy has more risk tolerance than I have, apparently, but he says, yeah. And that's funny. Out of 13 of you now, 14 out of us now total, this guy's the only one that answered. So that tells it to you. So for my yeah, I want to know why. And for those of you that can't answer, I want to know what your hang up is. What's making you not say, yeah, I would go for it? For my yeah guy, I want to know why. Why would you say yeah? Other than he just wants to prove he's got better risk tolerance than I do. He's a tougher man than I am. Let's just put it out there. No, Kevin, it's now in the money and below my $10 strike price. Tom, I'm glad you're back. You've always answered a lot of questions. What does that matter? Why does that matter to you? Look at your chart, right? Tom, I'm asking you that because it's obviously testing lows that it's tested before. First day that it's actually below 10, only stayed below 10 for 2 days. Way oversold institutionally. Way oversold on the RSI. So what does $10 have to matter with it being in the money? Are you saying you're uncomfortable putting an in the money option into place? I can go so far as to say it doesn't matter where it starts, it matters where it ends, right? It matters where it ends at. And it's okay starting in the money. In fact, it's okay in this case starting in the money as long as it doesn't finish 61 cents in the money between now and July. It is a sit and wait trade. I'll give that to you. It's a sit and wait, assuming something will get done or an pre-run earnings event will push FCX higher. But pretty interesting. And our risk tolerance giant here just corrected me and he said, hey, I investigated insurance fraud. So not only was he a police officer, but he investigated insurance fraud. So when you want to talk about someone that holds me accountable and it's tested me over the years, this is my guy. If I ever need to say, hey, you want to hear from someone other than me if I'm legit? Here's a guy who's been following me for 10 years plus. Look at his credentials and look at how how he's put me underneath the microscope and grilled me to see if I was legit or not. All right, comment was made. Why lose a penny for the potential profit? That's really interesting. If I can go back to my page, and I'm going to have to add some stuff back into this like I did last Tuesday. Let's go to FCX, and I'm going to go and I'm going to take a snapshot of where we're at here. So I'm going to go ahead and use this one. All right, I want this to be viewed back up to 100%. I want to insert the picture. I think I just took this one. There we go. Let's make it a little bit bigger. So pretty interesting, right? We just did our math. Why lose out on 61 cents of potential, right? There's the opportunity, potential profit over a single penny. Or why lose out on gotta get my math back in here. 1 divided by 62. Why lose out on 98.39% of the original profit potential over the 1.61% I'm missing? I agree. I mean, it really is kind of foolish. And I could probably get that 62 cents. But it comes back down to, right? A risk to reward for my personal risk tolerance. I don't want to buy the shares, which means I would be rolling short puts for a net credit for some time. I can do that. There's no problem with that. I can do that. Except I am going to have to use most of this money, most likely, to pay a pretty good tax bill coming up here September, October. But I could do that. I really don't want to own the shares, though. If I was going to spend $8 or $9 for something, at a 2% dividend yield, I would rather take Ford with that same 1350 upside, and with all due respect, I'd rather get paid more for the same position. I'd rather be in Ford. And I'm pretty sure their PE ratio going up puts it like a 1350 or 1370 upside. So there's more upside in Ford than FCX mathematically. It's kind of funny because this individual might come and hunt me down and shoot me if I put him in Ford. But numbers wise, Ford is a much better opportunity than FCX. Tom, I'm going to give you credit. I don't like that it broke the $10 round and horizontal, right? Support level. I'm on it. I agree. I don't like that any more than you do. What else could I tell you? Well, the honest answer is not sure how long it will be without a China deal to move this stock higher, which is completely irrational because, in all honesty, if you've done any research, we buy or look for a lot of our natural resources, and there's an article I will have on our next chat session, our next commentary, excuse me, market view commentary. China is restricting some of our natural resource purchases that we make from them, which should make FCX a more valuable company and increase their purchase orders because we're decreasing the cheaper version from China. So a China deal actually should hurt FCX because China is restricting our natural resources that we import or purchase from them. Well, FCX doesn't deal in all of them. It's more of a copper, gold, silver, natural gas, oil, refinery type stuff. So it's a little different, Kevin. You're right, it is. But they've been down on a China deal and they should have been up. It's just stupid market logic. There it comes down to. Stupid market logic has really hurt FCX. So, as I went with Keeve said, you need to do something that works on Visa. And I kind of chuckled a little bit because as I looked at Visa, Visa does seem recession-proof, does seem China-proof, but Visa is also caught in a range. But if you were to ask me, I think a pretty neat short-term trade would be a Visa stock purchase with a 165 covered call. And the reason why, if I was to look at this position, I would look to Visa for, could be a July 5th, 36 days. $165, you'd get $2.85 on the stock. You would take a $2.68 credit. Doing a little bit of math, $2.85 plus 268, $5.53 divided by $160. It's a 3.5%, 3.45% return on 36 days on Visa. If you're willing to get called out, how cool would it be if there's a dividend play in there too? No current dividend payment though, but you could possibly make another quarter. I forget when they have their dividends. They just paid a dividend, so you won't see one there in July. So, you know, you're looking at a 3.45 36-day 160 supportish level short-term trade, and on Visa that would be it. Relatively sideways, might move relatively sideways. A covered call strategy on Visa, the numbers work out. The numbers work out on Visa on one of these. If I had to do a trade, Visa is it. Buy to open a 162, what was Visa at? 162, 15, 16. I'm going to use 15 just for numbers. 162 share of stock. Let's spell here. Share of stock. Sell to open a July 05, 19, 165 short call for 268. Maximum profit is $5.53 or a 3.45% return on investment for 36 days. Break even, right? Break even, 162.15. 162.15 minus 268. Break even sits at 159.47 on a stagnant moving stock. And again, if I go one more time back to my chart, 156 was right there. 158. I really like this support, which is about 159.25, which is pretty darn close to 159.47. It'd be a couple pennies underneath, but obviously secondary exit would be to run this through an earnings event. So I like that simple trade. It has some support around 159.26 and secondary or adjustment would be to add 160 or 157.50. Long calls for the next earnings. And that's where I'd be. I like the percentage return. I like that it's short term. I like that it plays the summer doldrums. And obviously, any good China news or tweets could move this trade to an area where you could be profitable or have a cushion to stay in for a max profit. In all honesty, 553. If I could get out for $2 a profit, I'd be a happy camper. But I'd be more likely to stay in it for the 36 days. That really would be what I'd be looking for. For those of you like a percentage return, set an exit where you take $2.15 of profit, which means you need to, sell this for put a limit order to sell your order at 161.41-ish, 161.41-ish, and good till close. It'll get you out with $2 of profit. $2 of profit gets you that quick 1% return, one and a little bit more pretty quickly, and you're good. Any questions about today? Any questions about anything I said? China's restricting rare earth metals, which may stimulate home production of the same. Yeah, it is a site. I've got a pretty neat article on that one that I'm going to send out. Disregard cobalt. No worries. So yeah, I've got an article that I'm going to send out on how China is restricting rare earth metal sales to the U.S. It is some unique rare earth metals. It's not the typical ones that we hear: titanium, platinum, gold, silver, copper. So it will be interesting to see how those end up. But if you're looking for a new trade to put some money to work, Visa covered call is where it would be. You guys have a great day. Appreciate you being here. Again, Tom, nice to see you back. Haven't seen you for a while. Bill, glad you showed up today. And gentlemen, ladies, have a wonderful weekend. Look forward to seeing you next Monday night. That'll be held at 6 p.m. Mountain Standard Time for the Hurley Investments Market View Commentary. Guys, have a great evening. Talk to you then. Bye-bye.